Welcome back, everyone. So one of the sectors that I've been reviewing recently is gold, and today I thought I would share some of my best risk-reward setups for if gold decides to move higher from here. What are my investments and what are my thoughts on if it will? Now, my main hesitation was last time, what it still kind of is that in the short term, I'm still thinking that there's a better chance that interest rates, move higher rather than lower. And I think that the risk there is that gold underperforms still in the short term. And my thinking is, or was, I guess you could say, that gold would make another nominal low in the next month, and that would be probably the buying opportunity. However, not long after the prior video and up to today, really, I started seeing unexpected strength in the gold market, particularly as the equities started outperforming the metal. And that could be a sign of the turn. And so I'm now thinking that it's quite possible that I'd be wrong. So I'm looking through the names in the space and seeing uh, how to strategize if there's a way to leg in. I still think that if this chart breaks out to the upside, and it may be rolling over, but if it breaks out to the upside, that is the most significant short-term risk for gold. And so if people are thinking that this 10-year interest rates are going higher, then I would hold off. If you don't think it's rolling over, then gold might be a place to look. But again, my expectations, I guess my thinking is that there's probably another month worth of time where I would say there's more headwinds than tailwinds. And I'm just saying I could be wrong, and here are some options. So before we go into specific names, I just want to talk a little bit about risk. Gold mining is a tough business, and most of them don't actually make money, and I'm not just talking about the juniors. And we also have to remember that if we're buying gold miners to hedge against inflation, well, inflation means higher costs too. So mostly amongst the juniors and the producers really too, the idea of cheap is catching up against a higher uh, valuation against NAV. And some do deserve it, but most don't. And so when we're looking at performance, it's really hoping that the price of gold moves to carry the equity. And on the equity side, you want a bit of a re-rating catalyst, but you don't want to have to bet on that carrying the equity, because in the face of a poorer gold market, it will not work. Not only that, but if you look at the last move up and then the ensuing move down, there wasn't really much outperformance in the smaller, riskier names. And so that makes me wonder, if everything's going to move together, how much extra risk do you really want to take when everything's going to move up the same percent and move back down the same percent after? Which leads me to thinking that the best idea in the space is the royalty plays. As long as you don't overpay, you can win in a sideways market, you win in an up market, honestly, just as much as most of the producers if you look at history, and you lose less in a down market. So the thing is here, as long as you don't overpay, as long as you have the cash flow to protect you from the same dilution that juniors would have if the royalties don't have the payments, well then, you get cheap optionality and you're inflation hedged. And the next area that should be of interest from here to me is drilling. Now, from here, I think they should actually kind of act like a beta play because the additional profits from a higher gold price from here, well, it's no longer going towards survival. It's now probably should head towards expansion. And I know that people think, oh, drillers might be less exciting than an exploration discovery, and the exploration discovery might have more upside. And it might, but in aggregate, I think the drillers are probably an interesting play from here because if you look at the last bull market, there was this company was a 50 bagger, a 40 bagger, whatever. And you look at Major Drilling, which is the big driller that was around before then, it was a 37 bagger. I mean, is that really something to complain about with less risk? I don't think so, but I'm not saying that happens again. I'm just saying that if no one talks about the returns that could be made in other parts of the cycle, then no one talks about how great they could be. Now, a quick disclosure, I'm long some of these stocks and I'm planning on bidding on the others when I'm thinking that gold's moving up. Now, my first idea on the royalty front is Nomad. Now, this is a newer company. They trade at approximately NAV. I like that they have ties to Orion because I think that that'll be an asset. Orion Mine Finance is a large shareholder, and I think that the deal flow through that might be an asset going forward that's, well, not priceable. I like the alignment initiatives that's going on there. Small staff, but they're being paid with equity only for first year, and they own a large portion each in the company. They have some upcoming growth and they're focusing on more growth. And if they could get a premium to NAV, the growth would not only be easier, but probably more effective. I think that the best in peer group dividend is probably going to benefit them, not necessarily because it's a big dividend, but the market tends to like to arbitrage these things out and kind of look at the peer group and say, okay, who looks the cheapest based on their dividend? Okay, it's them. Maybe they deserve move up, this, that, and the other thing. So I think that that's a kind of stealth benefit. Their issue is obviously liquidity, and so this probably isn't the most appealing to the largest shareholders right now because they're mostly held in big blocks by the companies that they bought the royalties from. But if they can get a bit of momentum moving forward, if they can get the premium, then they could add royalties at a cheaper than NAV cost to them. By so doing, get more liquidity, and all of a sudden this problem's kind of solved as they're adding a lot of value. So not for everyone, but an interesting pick. My substitute pick for people that would require institution level liquidity is Sandstorm. So there too, there's growth. There's a slight premium to NAV. They're around NAV too. And the thing is, they're also tied to the ETFs, and that could be a positive or a negative. And they also have a counter-cyclical strategy in terms of acquisitions, which also can be a positive or a negative. Because if you want a company that you're just trading with the price of gold, well, then you kind of want them to be bullish all the time when you're owning them and not kind of saving up money at higher prices, even if that would in theory be the right thing to do in the long term. So it's a bit of a give and take on both of those. On the drilling side, I like GeoDrill. I think this is one of the more mispriced risk rewards in the gold and tangentially gold space. This is a company that's been growing 20% or higher compounded over the long term, heavily insider owned, and it trades at 3 times EBITDA in a sector that's maybe not completely bombed out anymore, but most of the sector is low utilization, not really, it's not hot. Or at least the equities in the space don't seem to be thinking that we're anywhere near what we'd call an exploration boom. The knocks on this one would be, again, liquidity and a bit of erratic earnings, but I think that if you look at take a long-term perspective, it seems to more than make up for it in terms of the long-term uh, results. Now, I will add a minor. The minor position would be Equinox, and this is a legacy position in that I still have it, still have some from a while ago, not as big as before. Now, they have numerous kind of growth initiatives, and they've been growing and they still have a number of projects that they're in the process of ramping up. And the problem is, not the problem, but the issue with growth when you're talking miners is that capital is needed in order to grow, and the cost of capital is expensive and often has associated dilution. Now, some companies can manage that better than others, and I think Equinox has done a fair job of it. Um, but yeah, so their price to NAV is lower, and hopefully they can get a bit of a re-rate on that. And the alternative, technically gold investment, would still be Dynacore. So I still have a large part of my position from before, didn't really risk off this one. I still think it's undervalued and has growth coming in the next few years. Again, not a minor, not a royalty, kind of somewhere between. And, I think they have, nice, biggest dividend on this list. And I think they should do well, even if the growth kind of disappoints, which I don't think it will. Might take, a year or two, depending on which part you're talking about. But to get in a few years, I think the earnings will be much higher, kind of irrespective of gold price. Obviously, if gold price is much lower, then maybe it won't be. But assuming stable gold, earnings should be much higher in a few years, and I think the stock is cheap today. Anyway, that's just about all for today. I figured I would just give everyone an update on where my thinking's at and where my shopping list currently stands. I don't know what's going to happen next, but it does feel like at this point the market may be telling me that I was wrong to expect a move lower. I'm not sure I'd call myself an outright bull yet, but figured I don't know how other people's process works, and if they were looking for my ideas, these are some that I had right now. Remember, this is not investment advice, and I wish everyone a great day.